Ladies and gentlemen, thank you very much for joining us this afternoon. Well, we are here to talk about climate risk disclosure, implications, and climate services for asset owners. My name is Natalia Tuyeva, and I'm Director of Sustainable Finance for HSBC UK, responsible for leading the green and sustainability lending financing within the commercial banking in the UK. Climate change is a key issue for businesses and will only increase in priority. And albeit we recognize that different countries and different customers are at different stages on this journey, HSBC is committed to supporting climate change and sustainability as overall and transition to a low carbon economy. We have made good progress to build the foundations to support our existing customers, and we have already engaged with corporates that have greatest exposure in most carbon intensive sectors on transition and physical risks as well. According to HSBC latest Navigator survey, which we conducted last year, and where we surveyed more than 9,000 customers globally, including over 1,000 customers in the UK, 96% of businesses globally feel increasing pressure to become more sustainable. There are opportunities foregone, but also reputational and financial risks that need to be considered if the businesses do not adapt to the climate change and to the changing market and customers' needs. The title of this event is Future Built. So what role does the built environment have to play in this equation? Well, the answer probably is that each of us have a role to play in limiting climate change and supporting the transition to a low carbon economy. According to the International Energy Agency, buildings consume 36% of the world's energy and contribute up to 40% of greenhouse gas emissions globally. Therefore, to meet the Paris Agreement commitment to limit increases in global temperature and decarbonize the global economy, as an example, the World Green Building Council has launched its program Advancing Net Zero campaign, setting targets for all existing buildings to be net zero carbon by 2050, and also all new buildings to meet this standard by 2030. The UK has set in law a target to bring its greenhouse gas emissions to net zero by 2050, and this is one of the most ambitious targets globally. Despite progress made in reducing emissions from homes, we need to go much further. New buildings that are being built now and in the next 5 to 10 years will still exist in 2050. Therefore, we must ensure that energy efficiency standards that we set now will actually meet the 2050 target. And interestingly, earlier today, the European climate law, the Commission, has published a proposal for legally binding carbon neutrality by 2050. HSBC's aspiration is to be the world's leading sustainable finance bank, and we publicly committed to provide 100 billion of sustainable financing and investment by 2025. And thus far, over the last year, we have already reached more than half of this target, of which $43.6 billion relates to green and sustainable products. In 2019 also, the group was recognized as the world's best bank for sustainable finance by Euromoney. And in 2019, also HSBC became the largest green, social and sustainability bond market underwriter in a year marked by rapidly accelerating diversification in the markets that we've seen. And aside from green bonds, to support businesses to achieve their aspirations to become lower, to achieve their aspirations in sustainability, we have opened up our green offering to businesses in large corporates, in mid-market, in SMEs as well. And this proposition is aligned to the Loan Market Association's Green Loan Principles. And the offering is available to all businesses with a minimum debt quantum of £300,000, thus allowing these businesses to meet their sustainability aspirations, to limit the carbon intensity of their businesses. We have thus far led by example, bringing into the market innovative sustainable financing solutions. And just bring into perspective just a couple of these. Over the last 1.5 years, we have provided first green loan in the UK for an office development of the Facebook headquarters at King's Cross. We have also provided the first green loan for the purpose-built student accommodation in the UK, It was also the first green loan for the hotel, the Edwardian for the Londoner Hotel in Leicester Square, and also, not to mention, the first green loan principles compliant revolving credit facility for Derwent London PLC. And I know that John Davis later today will be joining our panel discussion to talk about it. HSBC is also committed to the recommendations of the Task Force on Climate-Related Financial Disclosures, which relies heavily on transition risk assessment of our customers. And we are signatory to the disclosure recommendations by the Financial Stability Board's Task Force. We are also in the process of incorporating climate-related risk, both physical and transition, into how we manage and oversee risk, which looks at emissions of our own operations and also how we also assess our customers in terms of how they transition to a lower carbon economy. We define the transition risk as the possibility that a customer will be unable to meet its financial obligations due to global movement from high carbon economy to a low carbon economy. We are considering transition risk, therefore, from three perspectives: understanding our exposure to transition risk, understanding how our clients are managing transition risk, and measuring our clients' progress towards reducing carbon emissions. So in terms of, I guess, your question, what it all means on a day-to-day basis, physical and transition risk posed by climate change create potential financial impacts for the bank through higher, for example, risk-weighted assets, greater transactional losses, and increased capital requirements. Also, it is the impact from losses through the exposure to pools of stranded assets if you do not adequately respond to the needs of climate change. It is the physical risks from natural disasters, including floods and hurricanes, that could impair asset values and the creditworthiness of our customers, as an example. And we have already seen some prominent example of this happening already around us. For example, in January this year, BlackRock has announced that their decision to divest from coal across the actively managed funds, which represents just nearly $2 trillion by mid of this year. The automotive industry, then the UK government has announced earlier its plans to make all new vehicles electric in Britain, moving the target from 2040 to 2035, also including hybrids alongside petrol and diesel. And this news had a significant impact on the share prices of many companies. Also, in the real estate, an interesting example, I guess, would be the consultation paper that is currently in circulation to look to tightening minimum efficiency standard for privately rented non-domestic buildings. And if the government's preferred recommendation is implemented, it would mean that all non-domestic, privately rented properties would either need to achieve an energy performance certificate of B or higher, or be subject to a registered exemption. In HSBC, we are developing a new series of risk ratings to help us better understand and manage the climate and transition risk that we and our customers face. And we are working to embed transition risk rating into our day-to-day credit risk management of every single counterparty. To summarize, perhaps, there is an increased focus on climate change at all stakeholders' levels. As I mentioned, businesses and the role the built environment has to play in this. Governments, including the UK legislation to bring to legislate net zero target by 2050. Also earlier this morning, the proposal at EU level to also bring net zero by the same year, 2050. Then financial institutions and HSBCs, for example, how we see our role in this, on this journey to helping our customers to transition to a low carbon economy. Also investors and asset managers. We are seeing globally that investors and asset managers make environmental, social and governance, ESG criteria, an integral part of a large number of their decision makings on a day-to-day basis. On this note, I would like to turn to our panelists to discuss the emerging drivers and standards and guidance related to climate change adaptation and greenhouse gas emissions. And let me introduce our first speaker, Edward Hawkes, Head of BEI's Green Finance team. Ed has 10 years experience working in energy and climate policy with the Committee on Climate Change, FCR, the Department of Energy and Climate Change, and BEI's. He has also worked at a leading UK renewable investor, developing new business models for low-carbon projects.
Thank you very much, Natalia. I know we've got quite a lot of speakers, so I'm going to be try and be even quicker than I was intending on being. I just really wanted to start with a bit of a history lesson behind the green finance strategy that my department published in summer last year, and just talk a bit about how climate change and climate policy and its intersect with finance has changed since I started working on this over a decade ago. So it's been rightly pointed out the UK has a Climate Change Act and law put into place in 2008, which set up the Committee on Climate Change, and we're going to be hearing from Catherine a bit later on exactly their role in all of this. And over the course of the last 10 years, there's been a series of different policy documents outlining how we think we're going to be able to deliver on our emissions reduction targets, which is fantastic. There's a lot of policy that's been developed. More needs to be done, and moving to net zero, which we did at the end of, or the beginning of last year, only means we're going to have to go further and faster. And also we have the context of the UN Climate Conference in Glasgow at the end of the year, this year. So climate policy is not going away. We need to do more, and we've got that clearly on our agenda. I think one of the things that has really changed since I started working on this over a decade ago is the intersect and the interest of finance. And that's culminated in the publication of our strategy at the last year. What I'd like to stress is how that has developed, largely based on a lot of work coming out of the Bank of England, and specifically speeches made by Mark Carney back in 2015, referring to climate change as a clear financial risk, both to companies but also to systems. And that's really, really been important in terms of shaping how we've thought about it, but how climate change has been perceived as a financial risk globally as well, through the G20 and something called the Network for Greening the Financial System, which is a network of central banks committed to thinking about how this might impact the global financial system. So that all led to the publication of our document last year, and I just wanted to give you a really quick overview of some of the key takeaways there, and particularly linking it to climate financial disclosure, which I think some of the members of the panel are going to talk about a bit later. What we tried to do with the strategy was something that was collaborative. It was building on a private sector task force that HSBC, amongst a wide range of other private sector players, took part in. It's a cross-government publication, so it's not just my Department of Business, Energy and Industrial Strategy. It was Treasury, DEFRA, Department of International Development, the Foreign Office. This is something that we're considering across the whole government system, which is very important. And it was also supported by a joint statement, which is one of the first that we've seen from our financial regulators, basically showing that this is not just something that we're thinking about in terms of central government. It's about day-to-day financial regulation and the sorts of information that we want the market to be receiving going forward. It had two high-level objectives: aligning private sector financial flows with sustainable growth. And I think one of the key things to take away from that is the level of investment that we need to deliver net zero really surpasses the capability of public funding alone. We need to be leveraging in a huge amount of private sector capital, and I'll talk a bit about exactly how we might be doing that. And also strengthening the competitiveness of the UK financial sector. This is something that green finance really is just normal finance for green purposes, and ultimately it would be great if all finance was green. Finance is something that the UK is really strong at, so the UK government is viewing this as an export sector as well as something that's going to be important for the UK going forward. The three core elements of the strategy, and I'll pause at the end of that and hand over to the next speaker. First one is referring to greening the financial system. How do we inject into the DNA of our financial markets the physical and transition risks that climate change presents to us, as Natalia mentioned, and I think she's given a much more detailed explanation of how that might manifest itself. But in terms of the built environment, potential flooding risks to assets going forward is a clear example of that, but also the transition risk of some of the policies that we know that we're going to need if we're going to get to net zero on existing assets and assets that aren't being having climate change hard baked into their planning going forward is very, very important. And within that, I think probably the main thing to take away is the TCFD framework that HSBC have signed up to on a voluntary basis. There's a commitment in that strategy to an expectation from government that publicly listed companies and large asset owners should be reporting under that framework by 2022. And we're considering within a Treasury-led task force of our financial regulators exactly how that could be done, barriers to it, and how that could be implemented. So that's a real movement from government and an endorsement of that TCFD framework that didn't exist previously. Then in terms of financing green, a lot of people here today will probably be interested in how do we leverage in money into the projects that we know are desperately needed to deliver on net zero. The strategy outlines a number of different successful regulatory frameworks that have taken place over the last 10 years and new funds that government has announced over the last 2. So if you're interested in an overview of what's worked well, then that's a good place to start. And regulatory levers are really, really important there. It's not just about government putting down first loss points in funds, it's about regulatory levers as much as anything. And then finally, capturing the opportunity. We're really keen to work with new organisations like the Green Finance Institute that my department has helped set up with the City of London Corporation to showcase best practice, because I think that the UK is ahead of the curve here. I don't think we want to be complacent, but there's a lot that we can share, and there is lots of business to be won as a result of what we're doing in terms of green bond frameworks, disclosure frameworks, but also the more broader structuring of infrastructure finance that the UK has typically been good at. So we're really keen to hear from others about how government can do more to support that, both with our Foreign Office network and our partners in the Department of International Trade. And I will stop there because there's lots to get through.
Afternoon, everyone. So my name is Matthew McCartan. I am the Spatial Finance Lead in the University of Oxford's Sustainable Finance Program. And today I'm going to give you an overview of one of the projects that we're working on, which is the Spatial Finance Initiative. So the Spatial Finance Initiative was launched early last year, and it's a joint initiative between 4 core groups. So the Alan Turing Institute, the Green Finance Institute, us at the University of Oxford, and the Satellite Applications Catapult. So the primary objective or mission of the Spatial Finance Initiative is the mainstreaming of the use of geospatial data and analysis in traditional financial decision making. So here the geospatial data that I'm talking about is satellite imagery. So how can we start to use satellite imagery to augment and enhance the information that's going to be provided to key financial decision makers? So why is this important, or why is this relevant? So over the last 10 years, we've seen a significant increase in terms of the number of satellites that have been launched. So this has greatly increased the accessibility of this type of data. So it's important to note here that there's a variety of different satellite providers, from public institutions such as the European Space Agency and NASA, who provide all of their imagery open source, so anyone can access it and undertake their own analysis off the back of that. And we also have commercial satellite providers who provide very high resolution and high revisit rate satellites. So the satellites themselves also vary in terms of what they can actually detect. So the sensors that are used within these satellites vary quite a bit. So here we're not taking pure sort of true image photographs of the Earth. We can actually start to detect things outside of the visible spectrum. So we can start to look at things like shortwave, infrared, and thermal imagery, which can be used to undertake a variety of interesting analyses. So here we have this wealth of data that's being beamed back to Earth on a daily basis. So we can't use traditional kind of manual methods to analyze this. So we have to start to introduce some automated approaches. So we need to start to use things like artificial intelligence and machine learning to actually be able to pass out all of this imagery and produce something that's going to be actually meaningful. So the easiest form of kind of spatial analysis that can be undertaken is simply feature or asset identification. So we can look at specific features that we want to identify, and then we can sort of develop an algorithm to be able to identify those features. So here a lot of our interest is in physical assets, particularly from highly carbon-intensive industries. So these include the likes of steel plants, cement plants, and power plants. So here we can develop an algorithm that's going to be able to identify those assets, and then we can scan the world to be able to sort of categorize all of those assets. So here we can start to use those kind of fundamental asset level data sets to undertake some in-depth climate risk analysis. So because of the inherent spatial nature of climate risks, this type of analysis is very well suited to undertaking those climate risk assessments. So here, once we have the location of those assets, we can start to overlay climate risk maps. And then we can start to gather more details about the surrounding topography or geography of where that asset is actually located to enhance that analysis further. As mentioned, there are also a number of different sensors that are being implemented in these satellites. So one of the interesting use cases that can be employed here is actually measuring GHG emissions from space. So here we can actually directly quantify the level of GHG emissions that are in the atmosphere, and we can trace those plumes back to an individual point source. So we can start to actually quantify the level of emissions that are actually stemming from an individual facility. So here, by combining sort of that Earth observation and artificial intelligence, we can go a long way to creating some form of ultra-transparency. So here, there's obvious sort of use cases around climate. We can also start to look at more broadly, so we can start to look at sustainability in general, so we can look at SDGs, and we can also employ it more in a more traditional financial analysis form. So obviously here, one of the most important kind of contributors is going to be kind of the improved validation and verification process that these types of analysis will actually provide. So that's going to go a long way to improving the information asymmetries that are evident in the financial markets today. So that was a very quick overview of spatial finance and sort of how we can start to use geospatial data to assess climate risks. So, thank you.
Good afternoon. My name is Doogie Black. I'm a director of Climate Sense, a company that's dedicated to the development and delivery of standards on climate change. And this afternoon, I'd just like to talk a little bit about a new standard that's come out, ISO 14090, which is on adaptation to climate change, principles, requirements, and guidelines. The standard was published, I think it was July last year. And I was the UK principal expert representing the UK comments on the development of that standard and the writing of that standard. And so I was just going to make you aware of the existence of the standard and some of the elements that are within it. Before I start, though, I wonder if I could just see a raise of hands of anybody who's worked with standards before, like ISO 14001 maybe on environmental management. Great. 9001 perhaps on quality. Fantastic. Okay. So I'm talking to people who understand what standards are. That's good to know. We've not got much time to talk today, so I won't spend too long on making the case for adaptation to climate change. But there's many different reasons why different organisations, and especially in the built environment, that people would want to be able to get a grip of or develop the resilience to the impacts that climate change can bring. It could be that you've got assets that could be affected by climate change. It could be that you need to get hold of finance. We're hearing from some of the other financial streams that are going on that are making it important that organisations and people who are investing money are including adaptation to climate change within their investment decisions. We also have supply chain issues, getting goods and services in and goods and services out. And more actually people are becoming accountable for the advice that they give. So engineers and architects and so on are having to make sure that they can show visually that they can deliver on adaptation to climate change. And so I mean, the basic message is the business case for doing adaptation is very strong. It's been strong for years, but it's becoming stronger and stronger all the time as people start to really understand that they may be at risk. The case for developing a standard on this is, well, there's a number of different reasons why standards are useful. The market was growing very strong. There was a lot of interest in the development of this standard. It took 3 years to produce. We worked on it globally, and it's because standards can provide an agreed way of doing things. They're replicable approaches that use the best practice known globally. So we're going out around the world. It's developed by climate adaptation practitioners. It's not developed by special interest groups or membership organisations or NGOs with one agenda. It's people who have been out there delivering adaptation in the world for years, getting together and working out what is the best things that we can include in a standard. That provides trust that it's not being developed by special interest groups, as well as demonstrating to people what they can do, allowing benchmarks and gap analysis and looking at progress over time. And it cannot, because of that sort of directly comparable nature of a standard, it can be used from project to project, from site to site, from organisation to organisation, or also benchmarking your own progress in an organisation, looking at yourself now and using the same process again in the future to directly compare results. So I don't have time to go into the detail today of what's in the standard, but I'd just like to point out a number of different things. That it's actually designed for all organisations in any sector. So at times it's quite high level, but what it does is it creates the space for people to tailor-make their own responses. It provides a lot of guidance. It's not all shall clauses. It's not you must do these things. There are lots of shall clauses in it, but it's creating the enabling environment for people to understand the different processes and how they should deliver on adaptation to climate change. It's not a linear standard. You don't work from the start to the end. So those that are familiar with ISO 14001 and 9001 and so on, they'll recognise that as being a thing that is in what's called systems standards. It can be picked up by an organisation at any stage on their delivery of adaptation, whether they're just starting out, whether they're well on their way, or whether they're moving ahead of the field. They can pick up the standard and work with it from different points, going backwards and forwards as necessary to deliver what they've got going. But one of the main focuses that I'd like to end on today is that it's not just about vulnerability assessments. This is a standard that looks at risk holistically. So vulnerability assessments and risk assessments are a component of it, and your ability to communicate that and to develop plans. But it also has a very, very strong focus on adaptive capacity. So it's looking at risk in terms of understanding your vulnerability, but also understanding your ability to manage that vulnerability. And so that's how it's sort of more holistic. It's looking more at residual risk. It's looking at the risk that's left over once you've looked at your vulnerability, understood how you can respond to it, and then at the end of the day design action plans that either improve your ability to respond, or at least you can report on the ability you've got and check how you progress over time. So I'm actually going to leave it right there. I think I've just got it on the nose for timing. But thank you very much. My name's Dougie Black. If you want to know any more about what we do on standards, please come and talk to me afterwards, and I hope you've got some questions later too. Thank you.
Okay, hi everyone. Next bite-sized talk, and I'll try and keep this quite short as well. My name's Catherine Brown. I'm the head of adaptation at the Committee on Climate Change. For those of you who haven't heard of us before, we're the government's independent statutory advisor on climate change, and we cover both greenhouse gas emissions, so climate change mitigation, but also climate change adaptation. And I just wanted to spend a couple of minutes just doing a bit of context setting for buildings in a future climate and what some of those risks look like. So I've got a few charts, and I'm sorry for those of you at the back, you're going to have trouble looking at these, but I'll just explain what I'm showing, and I've just got a few of these just to set a bit of the context. This first one is about how much climate change for the UK is inevitable over the next 50 to 100 years. And the take-home message really from this chart, so we've got a blue graph on the left and a red one on the right. The blue one is what will happen if the UK meets its net zero target. The rest of the world also meets their climate change targets to be consistent with the goals of the Paris Agreement, and we start to see very, very ambitious, very quick reductions in global greenhouse gas emissions. So this is really a best case scenario, we would say, on the left-hand side. And the thing to note is that for the UK, so it's showing UK temperatures are still going to go up. So there is a certain amount of climate change that is still inevitable, even in that really best case scenario, and that's really important to note when you're thinking about the future performance of buildings in a future climate. We're talking about half a degree really before temperatures start to stabilise in that scenario. So we do see a stabilisation, but it isn't yet. It's in another 50 years' time. The chart on the right is where we don't want to end up. So this is if we carry on doing what we're doing at the moment, and the sort of scale of ambition and action carries on as we see it at the moment, and we're getting up towards 4 degrees by the end of the century for the UK. So that's definitely where we don't want to end up. But for adaptation, which is preparing for climate change that's going to happen, we're looking at somewhere between those two graphs, just to give you a sense of the scale. And then what I wanted to do was just show how that translates into a few of the different hazards that we all know, sadly all too well about at the moment in terms of flood risk, but also heat and water availability risks as well. So this chart, again, apologies to those of you at the back, but again, I'll just explain it. It's showing the number of people living in significant flood risk areas in England. And at the moment, there's just under 1 million people across the country living in areas at significant flood risk. And all these dots and lines are showing is different projections of future flood risk for different scenarios of the level of adaptation we do, the level of mitigation we do, and also population growth. And what it's showing is for the 2050s and the 2080s, those lines at the bottom, the blue lines, are the really best case scenario where we're doing a huge amount of global mitigation. So bear in mind, the UK net zero target is not going to have an impact on UK impacts. It's global climate change that's going to have an impact on UK impacts. So those lines at the bottom are, again, the best case. The lines at the top, again, are the worst case. So they're linked to the red chart I just showed you. And we're going up to, tripling, quadrupling of flood risk in the UK. So again, understanding current flood risk, but future flood risk as well, and not just flood defences, but what you can do to buildings themselves to make them more flood resilient is a really important part of the adaptation picture. And finally, just to depress you a little more, this is the projections of heat-related mortality in England. We know that there's a strong link between the indoor environment and people's risk of heat exposure, and at the moment it's not particularly well known, but there's already about 2,000 heat-related deaths across the UK every year, which is quite a big number when you think about it, but for a lot of those excess mortality, it's people who are already quite poorly with heart conditions or respiratory conditions. Again, we're seeing that this is a kind of medium climate change scenario, but at least doubling by the 2050s and possibly tripling by the 2080s. So passive cooling measures and designing houses and flats and commercial buildings that react well in hot weather is a really, again, important part. Now for a bit of good news, we can do something about all of these issues. So this is a couple of maps of the UK showing water availability. The one on the left, again, is a kind of low adaptation world where we're seeing the red and the orange bits of the UK are showing where we expect to see big deficits in the future. The one on the right is actually what happens if we put a lot of adaptation into the picture. So this is things like increasing supply from water companies, but also within buildings, having water efficient appliances, having behavioural change, so how people use their buildings and how their behaviour changes. You can get to that right-hand map. So what we do at the CCC is part of our job is to explain and analyse these levels of risks, but the other part is to look at the options and the solutions. Just 2 final slides. What we really want to see is buildings that do both mitigation and adaptation really well, and it's so crucial that these things are done together. So there's a huge amount of emphasis, quite rightly, on net zero, energy efficiency, low carbon heat in buildings, particularly in homes at the moment. And that is really, really important. But we also want to be seeing that done at the same time as property level flood protection, passive cooling, sustainable drainage, more urban green space and sustainable transport as well. And when those things are done together, you do get a really powerful solution to some of the risks that I've just showed you. And finally, just looking at what individuals can do as well. You're not going to be able to read this, but you can have a look at the slides afterwards. These are just from a special report we did on housing that was published last year that has a whole load of recommendations for new builds on the left-hand side and existing homes on the right, for measures that actually people living in their homes can take as well to both reduce emissions and adapt to a changing climate. So I'd encourage you to go and look at that report. It's on our website if you just search for housing, and have a look at how those packages of measures come out under the different scenarios. Thank you.
Thank you very much, Catherine. That was great. Always good to have environmentalists doing the doom and gloom bit. I love it. No, it's fine. It's good. I'm Richard Lupo. I'm Managing Director of a company called SUS Housing. We deliver something called Shift services. Shift is an environmental standard and assessment methodology that we've developed. We did look at energy efficiency and water efficiency and things like that, but in amongst it is adapting to climate change. We work mainly with housing associations and local authorities with retained stock, few developers, and we've had one millionaire as well we work with who was wondering why he was spending £30,000 a year on his electric bill in a house that he lived in for 3 weeks a year. So we helped him. The first thing we ask as part of our standard on Shift is about adaptation to flood. And the first thing we want our landlords to do, and we encourage them to do, is look at flood risk. It's absolutely amazing. 20% of the housing stock in Britain is social housing, and a lot of landlords haven't actually done even a basic risk assessment. I think, hopefully, some of our clients have had massive floods in Doncaster, and their homes have been affected there most recently, so that spurred them into action. And what we ask them to do is look at the tools are out there. The Environment Agency maps are really good, and a lot of them will look at the rising river flood risk. But what's happening now, and because of the climate change projections, what we're seeing is that there's going to be increased risk from surface water runoff. And we know that a lot of our clients have actually had incidents where their properties on top of hills are getting flooded because of surface runoff. So we ask them to look at that as well. It's pretty established, those flood maps, and they're pretty good. It gives you a good pass of which properties are going to do and the ways to do it, even if the association doesn't have GIS capability within their organisation. They can ask a local college people to do that as a little project. In terms of advising, what we do if you do find homes at risk, Catherine's nice little picture there, we've got some good ideas, but it's basically one of the things you can do is put the people on Environment Agency early alerts so that they are advised when something's coming. And one of the things we found out as well is find out who manages the drains in that area, because I haven't found out who is really responsible for it. And if they're blocked, collapsed, or otherwise not going to work, you will get surcharging drains which will flood properties. And make sure your new build, that's your biggest opportunity, is resilient to flood. Overheating risk is really, really, really difficult for social landlords. We've been asking for years and years now for them to do it, and we haven't given them the tools. The tools that are out there are shockingly poor for many respects. So let's start with for new builds. So if you're familiar with Appendix P, that is the overheating risk assessment. That is based on, what we found is that's based on historic summer temperatures, not projected summer temperatures, which are all going to be a lot warmer. And we're already seeing homes that are overheating now. The energy efficiency standards want them to be nice and airtight so heat won't get lost. But there's no risk assessment of ventilation or communal heat sources, or projected climate change. There is a very, very good tool called dynamic simulation, but that's cost about £6,000 to get that done for each home, and that's not going to be done. We've, for our standard, because I'm fed up of our sector not having the tools to do it, I've developed a risk factor approach based. So you count up the risk factors. Are you in a hot region? Have you got a single aspect flat? Is it in an urban heat island? But trying to find the source data for that is quite tricky. So we might be asking the satellite people if they can work out what a single aspect flat is. Did a great bit of work some time ago, and you can read it from the London Climate Change Partnership website. It's called Your Social Housing in a Changing Climate. It's got loads of tips about how you can do that. Absolute great piece of work, and I know that because I wrote it. Ventilation and external shading are the two biggest things that you can do, but in a social housing context, we also encourage them to do lots of green spaces, so that also helps with flood risk attenuation as well. And on new builds, really, really be sure that what you're building is going to be at low risk of overheating. That's what I wanted to say. Thank you.
Hello everyone, my name's Bryony Turner and I coordinate the Space for Climate group. I think a number of you have popped by our stand over by the main arena and played with the puffersphere where we've got some of the data I'm going to be talking to you about. If you haven't already, you're welcome to do so. We'll keep it on for a bit after this session. We're holding a drinks reception. You're all welcome to come in the VIP lounge, which is really close to the arena, so you'll be able to see the puffersphere from there. So for those of you that actually were in the discussion on net zero earlier this morning, I did refer to the Space for Climate group and my work with them. I coordinate this group and our members span UK government, industry and academia with expertise in climate satellite data, right from developing up the missions and designing the sensors and launching the sensors through to turning that data into climate data products. And then what you're interested in is how that data product can then be used for decision support, tools to inform building design, infrastructure design, and improve the resilience of our built environment, as well as referred to earlier, help us with emissions detection and start to really better understand the sources and sinks of emissions. So I'll just quickly go to this slide, which gives a bit of an overview of our services. We've got examples on our website, but I wanted to give a few key examples of the breadth of what the group covers. And we're really here today at Future Build to say, we want to hear from you. We've been working for 30 years in this sort of space sector community on climate data records. We've now got some really good records I'm going to go into. And we've also got near real-time data sort of continuously building those records. We think there's a lot of applications. In fact, we know there are a lot of applications in the built environment sector. And what we haven't done until really very recently is actually come and talk directly to you. So, we can also hear about what your data needs are for designing the missions that will, go up in the future so that you can get your spec in. Like if you prefer high resolution heat data, for instance, and what exactly it is you need. So one of the things I wanted to cover with the mission development, we've got a satellite launching in 2021 called Microcarb. Very exciting. It will have a city sweep mode to actually be able to detect carbon emissions. We've got another mission going up, and we do a lot of work in the UK on quality assurance of the data so that when you are using the satellite data, you can understand the level of uncertainty associated with it and the level of robustness. We can all go on Google Earth and pick out any kind of nice screenshot or snapshot, but when you're trying to actually design homes and look at heat thresholds and that, you want to know what data you're using because that could result in either a design, a sort of optimal design or possibly a design failure. And we have expertise in developing data products. So there's an example called WISC, which is windstorm information, which is a data set that's been produced for across the whole of Europe. So sometimes the climate satellite data is used to actually for what's called reanalysis. So that windstorm data currently used by the insurance industry, but really, really important and useful information for engineers. And then we have expertise providing knowledge products for decision support. So I'm going to go into some of that in a moment. We've got a long history with creating these climate data records. I won't go into too much detail, but what's happened is that the satellite community and the space sector has been working with the UNFCCC to develop these climate data records really to monitor the health of our planet. So when I'm talking about climate data records, I'm talking about things like land surface temperature, sea surface temperature, sea level, soil moisture, all sorts of things that are actually really interesting data sets for built environment and infrastructure sectors. The scientists have been, and a lot of them UK world leading experts, have been working away to stitch these data sets together. So we've now got 20, 30-year records on quite a number of those variables. And they're recognizing that beyond UNFCCC, actually there's many other applications and uses of them. So I've just given some examples of some of the ways I think the data can actually be used and of interest to you. Come over and see me later at the pufferfish for the land surface temperature data. We alluded to it earlier, but it can really help with urban heat island information, also with vegetation stress, detecting it up to 2 weeks before you visibly see it. And then I'll just show you this, so then you can actually sort of link in the climate data as well, not just for sort of the built environment design and understanding urban heat and public health, and perhaps as we go towards more smart operations, understanding when it's okay to open windows or not, when you're looking at both heat and air quality data, both of which can be provided by satellites. But also in terms of sort of backcasting, looking back at when we've had extremes and using that data. Then there are near real-time products that can then build up. So today's near real-time products can build up to tomorrow's climate data records. So it's an example from Telespazio using radar data for flooding. Sorry, I forgot to say, I think that was Carlisle in, I'll get my dates all muddled up now. I want to say that one's 2015 and Somerset was 2014. Don't quote me on that. But you can see that actually you end up seeing some nice visual or some data that you would plug in. And emergency responders use this a lot, but could we be using this with smart building operations? But actually you can see there's a whole sort of flow chart there of the work that has to go on to be able to get the data from the satellites into an information product that's actually useful. Also can be used for landslides, and now thinking about climate change risk disclosure, looking at those kind of threats using both the projection data and then looking at historic data to better understand the risk posed to assets and those that they've already experienced in the past. We've also got an example for Earth Intelligence, another one of our group members. One of the things they've been doing is combining heat data with traffic data for smart cities, and also things on coastal protection and management. And there is not enough time to go into detail, so you will have to come find me and I can put you in contact with them or look at our website. But that's the example where they're starting to come up with these climate resilient services and combining this data so it's information products you can then use in your design. I'm going to very quickly flick through now just a couple of other tasters of types of data. So there's precipitation data, sea level data, thinking about those of you that are interested in green infrastructure, so green vegetation cover, soil moisture data, wonder about the contaminated land community, those of you working with brownfield, understanding earth movement, so understanding changes in soil moisture. I will end it there because we've got many other speakers, and just want to say I've helped curate this with Kristen. Looking forward to the discussion and your questions. And please do join us at the networking reception in the VIP lounge afterwards to continue on the conversation. So thank you very much.
I'm going to try and speak slower. I feel everyone's getting a battering. Okay, hi, I'm Natalia from TFT. I am from a property and development consultancy, and I'm just going to shed some light on what happens at a portfolio level. So that's my office after Storm Dennis. We couldn't come in for a couple of days. It's just really showing you that we've talked about, Carlisle, Doncaster, Somerset, places really far away. This is Guildford. That's not even it's like half an hour on the train. So climate change is going to affect your high street, your office, pretty much now. And I thought it was relevant to talk about the scale of the challenge, the timescales we have, and the approach that we should be taking. So So as you can see, these are some tweets that I picked up on. There is no way that we can defend every property against climate change. We do need to start making them resilient and not rely on someone else to do it for us. We need to develop ways of assessing properties quickly and doing a climate change risk assessment quickly. And at the moment, that space is taken up by insurance companies using financial data on insurance claims and disaster management. Not everyone can access that, not everyone can afford that. So as an industry, how do we come up with a plan of attack to identify the assets that pose the greatest risk in terms of performance? And how do we then disclose that and communicate that physical defence risk, the transitional risks from changing policies and the market approaches, and the future resilience risks for both existing and new buildings? And from our perspective at TFT, we are seeing more insurers being involved in acquisitions, which is great, especially post-Grenfell. You know, the cladding issue is still a really massive one, but it's evident from what we're seeing that the buildings that we are building at the moment and the buildings that we have are just not fit for the future, and we need to find a way of measuring that risk. So from a technical due diligence space, we look at risk, we look at transactional decisions, and we look at future-proofing investments, but it's all done from a retrospective perspective. So, you know, TDD, technical due diligence, it's a visual inspection. You look to see if there are existing defects or faults and repairs. You look at what the future plant replacement might be over, say, 10 years. You look for technical obsolescence, for things like, are you going to have product support for your lighting controls and your lifts? You look at the fabric, but you can only really see what's there. You look at cracks, leaks, that kind of thing. You look to find hazardous materials like aluminium composite materials or asbestos still. So all of this is historical. It's really difficult to access building management information systems, and people can be quite cagey about what they give you. So getting access to that is difficult, and a lot of it is anecdotal. And what we should be thinking about is how the acquisition process and how technical due diligence can be forward-facing. If we're serious about meeting net zero carbon, then we have to know how much it's going to cost to upgrade and how long it's going to take and what it's going to take. And portfolio owners need to know about the performance and resilience of the buildings that they are buying, and how that fits into their business strategy over the next 30 years. How long is that building going to stay in a portfolio? Will it be sold at 2030, 2040, 2050? At what point does it become a stranded asset because policies change and your EPC now has to be a B rather than a D? But we're not disclosing that performance at the moment around design and that thermal comfort. So we have to ask, when do we get to the point where if a building is not performing as it was designed, and it, you know, rendering that BREEAM standard or that EPC fairly meaningless, what impact does that have on the valuation of the building? Because on paper it looks really good, but actually in reality it doesn't perform, and that's not being disclosed properly at the moment. So TDD in the future could look really different. It could look, you know, not just at how big the equipment is and how much it will cost to replace it, but over how long, you know, is your pipework and distribution system sized appropriately? Are you going to be able to be a net zero carbon building at all? Aware that we're running out of time. Time frame. The maximum amount of carbon that the EU commercial real estate sector can emit from last year until 2050 is 24 gigatons, and that's for a 2-degree warming scenario. At the current rate that we're burning, we're going to run out in 2039. And if we're really committed to a 1.5-degree scenario, we'd get through it by 2036. In practice, what does that look like if you're developing buildings, especially large ones in the centre of London? That's 2 to 3 property cycles. That means we've got 2, maybe 3 opportunities maximum to get it right, to get to net zero carbon. Are you completely sure that your design team, your property surveyors, etc., are all aware of the resilience issues? They get 3 goes tops to get it right. How quickly can we roll something out to assess risk? Which brings me to my last slide, consistency and collaboration. We're not a great industry for collaborating, and we do struggle with consistency across all of these different areas. I have to point out that investors love GRESB, and they want to see more portfolio portfolios reporting to the GRESB Climate Resilience Module. We've got the Carbon Disclosure Project, we've got TCFD, etc. But we should also be looking at things like the Carbon Risk Real Estate Monitor, which provides a common framework which all of these different parties can feed in and look at things like strategy, risk assessment, responsibilities and mitigation. And it even talks about embodied carbon for those of you who like that kind of thing. But you have to think about, how do we get project teams who are designing big-scale refurbishments or new buildings, how do we really get them to assess their designs honestly? With more and more prolonged and extreme weather events that we have, and the abrupt change from one season to the next, and from one event to the next, we don't have a model that can fully risk assess things like soil moisture, which might lead to subsidence, or wind buffeting, which we saw recently, and things falling off your building. There's nothing that can assess for that at the moment. So as an industry, when is that going to happen? So increasingly at TFT, we see these kind of issues coming into the acquisitions phase, and we're looking at changing the way we do technical due diligence in order to advise clients properly. So the direction of travel is changing, but it's slow, and we do need to get much more into the details and scale it up very, very quickly. And I'm hopefully going to talk to you afterwards about more of that. Thank you very much.
Great, thanks very much. So I'm Kristen, and like Bryony mentioned, she and I co-curated this session. I run the London Climate Change Partnership, so effectively I sit in City Hall in the Mayor's Environment Policy Team, but my role is a lot more outward-facing. It's about coordinating activity among different stakeholders across different sectors in London to support the resilience of London to climate change now and kind of into the future. And by activity, that means, sort of knowledge exchange events like this. It could be projects like Richard mentioned with retrofitting, and it could be research and coordinating research and that type of thing. I think one of the more important things about a partnership like ours is the way that it kind of traverses the boundary between science and practice, science and policy making, which is an important function, as we've seen. So I thought I'd just talk a little bit really quickly about some of the projects that some of our partners have been working on. I won't go into the details about the London Climate Change Partnership. This will all be online later, but I wanted to talk a little bit about some of the things we've been working on, some of our partners. I think Bryony mentioned very quickly about heat data and vulnerability. So this is about getting colleagues from the natural environment, the built environment, local and national government together to think about how we use new generations of Earth observation data to understand how to target our interventions to deal with heat, and then also how to monitor those. Our colleagues at UCL are working on a project that is investigating the risk of overheating in care homes and the kinds of interventions that you can put into place to manage that. And I think the important thing about this is that it shows that the use of the building and the professional culture of the people working in that building have a huge part to play in the way we deal with buildings and how resilient our buildings are. We have a transport adaptation steering group, and colleagues from TfL lead on this group. And this is really just about sharing common problems and solutions across sectors. We work with London's sort of TfL, but also national infrastructure transport providers, and also provide a cross-sector conversation between the transport sector and other sectors where we see interdependencies. We've worked with London Resilience, the London Resilience Partnership, on understanding the sort of potential for cascading failures across different infrastructure sectors from disruption to one sector. So we've come up with a tool that helps us to kind of look at that and helps to identify some of those pinch points. And the GLA is also producing a few different kind of mapping applications, sort of an underground infrastructure asset map and an infrastructure mapping application that are all about sharing data between infrastructure sectors
to help improve resilience, or to provide a platform where people can work out some of these kinds of resilience issues. We've also got a new London City Resilience Strategy, which is on the basis of the 100 Resilient Cities program, which was launched the Resilience Strategy was launched in February. And we've been really good at being able to incorporate a few kind of climate change adaptation and resilience measures into that. So there are a few actions around business resilience and how do we promote resilience across different business sectors. And another one is looking at how do we integrate water reuse systems into new development, even if they're not connected to anything yet. Just have them there, because retrofitting this kind of thing is a lot harder to do in the future. And like I said, we also coordinate knowledge exchange activities. And so like this one, for example, that it was literally just getting all sorts of built environment colleagues together with academia and some policymakers to look at how the dense urban form can be either a barrier or enabler to adaptation, and then some of the things that we can do that. So that was working with CIBSE Resilient Cities and the old ARC network. And I think that's actually it for me. So that was quite quick, hopefully. And we'll move on to Keith. Thank you.
No, that's not me. I haven't got a PowerPoint.
You haven't got, oh, that's right. Okay.
Still not me. Anyway, thank you for the invitation. I'm going to be sticking to buildings, but I cover everything from commercial to land to farming to agriculture to food and everything else onto it. So I'm a practitioner. So the Trust has 28,000 buildings, but also all of the associated infrastructure. Times that by probably a factor of 10 on bridges, on roads, on infrastructure, and all sorts of things. So we're still in the doom and gloom phase at the moment of understanding the problem, understanding the vulnerability, the impact. We're actually working with Doogie on ISO 14090 at the moment, because it gives us a framework when you cover such an amount of information. So some of the work we're currently doing is looking at vulnerability on shrink heave on clay. We've got thousands of buildings on the Oxfordshire clay band. So we're already seeing the indications. We're seeing collapse, we're seeing cracking, we're seeing all sorts of stuff. Wind-driven rain in the west, we're seeing inundation, we're seeing lead that's actually shifting on buildings, which is allowing more rain in it. It's the real small stuff when you add it together that has the impact. I'm going to say this, and I mean it properly, in terms of storms, relatively easy to deal with, big impact, it's this slow, gradual, incremental change in the background that I think we're all struggling with. When is it too much? When is the factor? When do you elicit an adaptation response? Nobody can tell me where the red line is. So we're currently working on that. We're already picking up overheating in old buildings in the southeast. Ham House, Richmond upon Thames, last July, Georgian Mansion, we had to close because it wasn't a safe environment for the staff and the visitors to the property. Urban Heat Island was really impacting there, but the house has been designed to point south, big windows, gain heat, and therefore we're in a different climate to what they were set up with. Then we've got net zero carbon. We're using the greenhouse gas protocols. 2030, that we've set a date, is really not far away. In terms of the entire organisation will be net zero carbon by 2030. But we're still working on that one at the moment. Another bit, because we've got something called the 1907 National Trust Act, we can't actually dispose of assets. They become a liability because there's something called inalienability. And therefore, we're in discussion at the moment with the regulator about how do we deal with change, how do we deal with loss. If a building is scheduled or listed, it has to be in a certain condition with certain aspects into it. How do we change these buildings? The regulation doesn't, at the moment, on habitats on buildings, doesn't really allow for you to just let it go. So we're in discussions and quite a big research project at the moment working on that. So mitigation, to me, is where I come from, is relatively easy to understand. which is kilograms and following through and input, throughput and output. Whereas adaptation is a series of compromises all the way through. That's the bit we're looking at. It's a challenge at the moment for the world in general, but for us, we're a conservation charity with an asset that has to be a certain condition in a certain place. That's our challenge, really. Thank you.
Good afternoon, everybody. My name is John Davis. I'm the Head of Sustainability at Derwent London. For the sake of expediency, you can look us up online, just Google us, and you'll find everything out you need to know about us as an organisation. But I wanted to have a quick chat with you about climate risk disclosure. So as been mentioned, this thing called TCFD, we signed up as a supporter a number of years ago to the framework, foreseeing that this is something that's going to be coming down the tubes as more of a regulatory feature than it is a sort of a general compliance feature. So I've got a snapshot here of our first disclosure back in 2017, or back in our 2017 report. And it was an attempt to try and give people a view about how we see TCFD, but also how we respond to some of the questions that lie within the framework. And I think it's a very interesting framework when you look at it in terms of some of the questions that it's asking. But more specifically, it's interesting to see how the investment community have picked up and using the questions that lie within that particular framework to start asking more detailed questions of us as a business. But before that, we'd already started on our journey to net zero carbon by setting a series of science-based targets. Here they are here. So this is one of the last measurement pieces. So we'd already clocked that this sort of interrelationship between the science-based targets and the TCFD sort of model and framework was something that was very much intertwined and interlinked. So moving beyond that, we started to have a look at the thing called scenario analysis. And as a business, we couldn't really work out what that actually meant. It gets banded around quite a lot amongst the scientific community and also within the regulatory frameworks in TCFD. But when you're at the end of the wedge that we exist on, you try and work out what is a scenario analysis in response to a building. What does it mean? How do you do that? Is it just a mathematical equation? Is it something that you just stick something to? I mean, how does it work? So we came at it from a very pragmatic perspective in terms of looking at our portfolio, which is pretty much located neatly within zones 1 and 2 here in London, and trying to work out a series of measures that we could apply to each of those buildings to try and drive down and or in some cases eliminate the carbon burden and intensity within those properties. So we came up with a sort of a scenario analysis tool which ultimately then starts to build the picture which helps us then navigate ourselves against the IEA and also the UK Markle line as well within the Climate Change Act. So we were trying very early on just to try and sort of piece those pieces together. And to varying degrees of success. And this is currently a tool that we're revisiting in light of our new net zero carbon announcement, so bringing forward that 2050 journey back to 2030, so 1.5 degrees. So we have to go and start again and actually work out the level of intervention that we're going to have to do within our property portfolio. But we think we've got an idea about how that should work and how it should piece together. And also, as Natalia mentioned in her introduction, we've dipped our toes into the world of green finance. And working with our corporate banking partners, HSBC, we have created our green finance framework, which is also co-authored with Natalia and the rest of her team as well. So if you do want some more details on what that looks like, please come and find me afterwards. It's free to download off our website, so please jump on and have a look. But what I wanted to try and point out to you, what I've been asked to point out to you rather, is how we link climate change into this piece. So the LMA's green loan principles cover a whole heap of things with regards to buildings, with regards to energy efficiency measures, etc., etc. But they also focus in on climate change adaptation. So one of the factors that we can draw money against within our green finance framework is to do with climate change adaptation. And ultimately, we would like it to start feeding more of these. So this is our white collar factory development over on Old Street, and it interestingly was one of the case studies for the technology strategy board, as they once were with the Future Climate competition. So this is one of the buildings there that looked not only beyond the traditional 30 and 60 year, but we've also looked at a 90-year time horizon for this building as well in terms of climate resilience. And that's me very, very quickly. That's the quickest presentation I've ever done. Thank you.
The last speaker in the last session of the day. Thank you for still being here. I'm Ben Stubbs, and I lead on sustainable construction within UCL Estates and as part of the university's sustainability team. I'm here today hopefully to end on a relatively positive note to talk about a building which has just been open for about the last year or so, our new student centre, which I think scores very well in terms of both mitigation and adaptation. I'll be checking with Catherine afterwards to make sure she approves. So we're about halfway through a 10-year capital programme transforming UCL. We have about 270 buildings that we occupy, some of which date from the 19th century and clearly present us with great challenges in terms of what we can do with them. I'm not going to talk about those today. I'm going to talk about a nice shiny new one. We're also on site in the Olympic Park at the moment. We have our first two buildings which are going to form part of UCL East, which have an enormous number of sustainability requirements from various different directions, which is fantastic because it makes my job a little bit easier. But we're going to talk about this one because it really actually has been a career high for me for a number of reasons. Not just because it has excellent sustainability credentials, but also the way that the project has been tackled from every single angle. From the project sponsor at the top of the university, one of our vice provosts, through the design team and the contractor Mace, they really have looked throughout the whole process at how they can really embed and challenge on sustainability from different angles. And it's a building which is very much loved by the students and extremely popular as well. A little bit of context. We launched a new strategy for the university about 6 months ago now. Within that we have 3 signature programs which have very clear implications for our built environment. Positive climate, and we're looking particularly there, we've committed to net zero carbon by 2030 as an institution, and clearly we have an awful lot to do with our buildings in that area. While Bloomsbury, we're very challenged, particularly in Bloomsbury, with what we can do in terms of improving ecology and biodiversity, but we're trying to look for opportunities to increase the amount of green space that we have and also enhance green space as well. And the Loop is our take on the circular economy. The circular economy is a major issue within the university as well, both coming from the academic side and how we interpret that within estates. And underpinning the strategy, we also have separately a sustainable building standard, which sets out our minimum requirements for all our construction projects. So not just the big shiny new ones, everything down to the small fit-outs. We want to be able to capture everything. And it aligns reasonably handily with those different signature programs that we have in the strategy. And underpinning everything, and this will come up again as I'm talking, we really want to make sure that everything that we're doing has clear value behind it. We don't want to be just ticking boxes. 2 minutes. So in terms of net zero carbon, it's a little bit daunting for a number of my colleagues to think that we're going to have net zero carbon buildings in the very near future. And this slide really I've been showing quite a lot really to kind of make the point that we're not alone, and we've already heard that from colleagues in the room today. So the building itself, it's a BREEAM Outstanding building, the first one for the university. But actually the way that we approached that was by making sure that every credit within the BREEAM methodology had value behind it. We didn't want to be just ticking boxes. We wanted to really scrutinise how we could get the maximum value out of it. It has excellent levels of passive performance, a natural ventilation strategy with a fantastic atrium with passive stack ventilation there, and excellent levels of thermal mass within the building. We have ground source cooling, boreholes which apparently go down 150 metres below the building, and then the cooling is embedded within the slabs. And I can definitely confirm from my own experience last summer when we had temperatures in excess of 30 degrees, it was one of the most comfortable buildings on the campus. We also have 250 square metres of PV on the roof, about to be eclipsed by one or two of our other buildings, larger buildings, but in Bloomsbury that's not bad. And also we've done a little bit to be able to improve the site ecology by putting on a green roof and also improving some of the ground level planting as well. The internal environment, the atrium brings in fantastic levels of daylight. We've really scrutinised the project from all angles in terms of indoor air quality, and also, as I said already, it's got really good levels of thermal comfort. In terms of circular economy, design for flexibility and adaptability has been at the core of it. Durability and inherent finishes make sure that we've got minimal maintenance requirements, hopefully. High levels of cement replacement, around 50% on average GGBS within the cement mix, and a fantastic finish which has now become the benchmark for what we can deliver elsewhere. We've saved 55% in terms of operational water, and the project delivered zero waste to landfill the first time we've done that. Just to finish off, we have a new estate strategy which is about to come out, which I'm delighted to see will be supporting the implementation of the sustainability strategy, and has very strong themes of the stewardship and protection that you would expect for buildings that we obviously occupy over the long term. It also accepts the challenges of some of the heritage assets that we have, and really puts an emphasis on resilient facilities and a commitment to green infrastructure. And I will stop there. Thank you.
We would like to move now to the Q&A with our panelists, and I would like to invite 5 panelists to join me here on stage. Please don't feel shy, just come. Anyone?
Actually, if all of our panelists could just kind of come up and just mingle around. We don't have enough chairs. I do apologize. That was the way it was set up.
I'm
yeah.
fine out of the chair.
Thank you.
Thank you. I would like to start with the first question, but the idea is that let's engage the audience and also feel free to ask any question. I guess the interesting one would be, it has been widely acknowledged in the industry that embodied carbon has not been fully accounted for by the existing building standards. And if you look at any, I would say, development, by the time the building is fully occupied, somewhere between 30 and 70% of its lifetime greenhouse emissions would be fully accounted for. So how do we approach the assessment of embodied carbon, and also separately, how would we approach the assessment of Scope 3 requirements? So would anyone like to take this?
So embodied carbon has an assessment already, which exists in the public realm through the RICS methodology. So you can assess that quite easily. In terms of mitigating, the approach of using circular economy principles in the design of your new build or your refurbishment, that's something that should be integrated into that process as soon as possible, really. As once we've figured out how to do a completely circular building, then the embodied carbon emission should start dropping pretty much immediately. I think John has quite a lot to say on this as well. No? You sure about that, John?
Would anyone else like to add anything on this?
We spend a lot of time talking about concrete, actually. I think because it's so completely dominant, we've really looked at trying to challenge, particularly in this building, how far we can go in terms of cement replacement in concrete. So, as I understand it, around 50% cement replacement results in around 50% cut in embodied carbon of the concrete, which is fantastic. But I am very conscious that we concentrate on 1 or 2 key materials. And as Natalia says, I think we need to use the methodologies that are available to drill down a little bit further.
We're currently assessing Scope 3 supply in it, and it's a third of our carbon onto it. It doesn't look like the supply chains there or anywhere near it, but at least we recognise the scale of the challenge on Scope 3 downstream carbon. It's just, I think we're waiting for the economy and industry to say, what do you want? So when people say net zero carbon, I just ask them, what do you mean? What's in your scope? Because everybody seems to have a different approach. Is it greenhouse gas protocols? What are you using to define your carbon? And it's always a different thing. I won't ask you.
Yes, I guess it's a challenging one. On the TCFD, as the title of the panel is on the task force disclosure on climate-related on climate. In its report, the task force, I know, emphasized the importance of transparency in pricing actually risk, and including risk related to climate change, to support informed, efficient decision-making for any business type. Therefore, how should the businesses ensure that they correctly view the risk and correctly assess the risk, and not just look at what's here and now, but also correctly assess whether it's a long-term, medium-term, or short-term type of risk?
Hello. Yeah. If I could just start with answering that one in terms of the standardized approaches that I've been working on for climate change resilience. There's a number of other standards in progress as well, so it's not just ISO 14090 that I was talking about. I also work with the European Union as well on European standards and embedding adaptation within them. But most of the process is now focused down on what are the decisions that you're trying to influence by a standard. And put quite simply, or quite crudely I should say, the longer life the decision, so whatever decision you're taking, the longer it's going to last into the future, the more you have to be looking at the adaptation consequences over the life of that decision and the full life cycle, not just the design life. But when you mentioned TCFD, what I am noticing more and more is organizations struggling a bit with the difference between the life of a financial asset and the life of a physical asset, and how they relate to one another, because the financial asset itself is actually rather short. I mean, I think mortgages are among the longest financial assets that there are, but bonds and other share agreements and grants and loans and so on, they have a very, very short life. So I really like the idea that TCFD is looking much longer in that perspective. But up to date, I think people are still struggling quite a lot with understanding how a short-term financial asset links to a longer-term physical asset.
Yes, thank you. Would anyone else like to add?
I guess just from a regulatory perspective, the position we came to in the Green Finance Strategy last year was an acknowledgement of the fact that the TCFD is a really useful framework, but there's quite a lot that needs to be done to think about how you begin to incorporate that into a regulatory format. And you'll probably have seen that the Department of Work and Pensions has got an amendment in the pensions bill at the moment, allowing for TCFD reporting to be part of that legal framework going forward. But we're really, really aware that there's a lot of legwork that needs to be done behind the scenes, and in terms of coordinating guidance and making sure that there's a common framework that everyone is adhering to, because it's a lot of work to do, and it's only really going to be genuinely useful if everyone is using similar sorts of metrics. So I don't think we've got an immediate answer to all of that, but we didn't want to rush to regulate something that there's an acknowledgement there's a need for standardization there.
Yes, thank you. Shall we move to the audience? There are a couple of questions.
I mean, amazing, 12 speakers in such a short span of time. Just needed part 1 and part 2 actually. But really, really well done, people. I have a few quick questions. Won't take much of your time, but just short ones. One for you, Natalia. You mentioned transitional risk ratings being introduced by HSBC. Is this shared by you with your clients? Can you give me an example? What does this look like in plain English? And I'll move on to others, and then everybody can answer in turn. Second one is for Mr. Black, the ISO 14090. Has anybody done this so far? Any prominent names that you can share with? Third one is for Ms. Brown. The projections are really pessimistic, as you highlighted. Have you considered telling this to the government to make the adaptation a bit mandatory, like legislation? I mean, if you guys are the government and you are doing this, why don't make it mandatory, like a legislation? If Dominic Cummings agrees, but moving on. Just last one. This is for, I think, Bryony. You got this, I'd honestly never heard of you guys before, Space for Climate. So this, this telespazio and all this satellite technology, which is amazing. Were you able to project the Storm Dennis flooding? The flooding was so, the impact was so bad, and you have these amazing satellites. Were you able to project the level of destruction that is going to happen and warn the stakeholders about it? I mean, there's no point in looking back. You have satellites, look forward, and tell us what is going to happen. That's the whole point, right? Okay, thank you.
Thank you. There have been many questions. I'll take the first one on the transition risk and what it means for us, HSBC, and for our customers. Well, transition risk we take quite seriously because, in a way, it helps us to understand how our customers moving to a low-carbon economy, what are their associated risks, both financial related and non-financial related, on the back of the climate, on the back of the transition to that lower carbon economy. And because that helps us to understand our scope 3, I would say, emissions, because that's the only way we can move on the scope 3 emissions as long as our customers move, and also how do we help our customers move to the net zero or to lower carbon economy. And we have looked at the higher emitting sectors in the past, and that includes oil and gas sectors, metals and mining, construction, automotive, power and utilities, just to name a few. And these sectors, it's also reported in our latest ESG report, it accounts for less than 20%, 20.6% of the total lending. And we analyze and see how we can help these customers to perhaps to transition, to provide the financing to support this transition. Because in a way, the transition risk rating will form part of the credit risk decision on a day-to-day basis, and we have stated this as well publicly. And over time, this transition risk rating will be applied to every single wholesale counterparty entity on our book where we provide lending in one way or another. And it's a stage approach how we took it, to first to understand the high emitting sectors, then to bring additional sectors, and we will provide further disclosure at the end of this year. And Mark Carney has been a big advocate, and I know that next year all banks in the UK will be climate stress tested, including on transition risk, to understand where the financial institutions are on this journey and what is the exposure. And to do this, all we need to do and all we can do is to work with our customers to see how we can help to work together with our customers on transitioning. Did it answer your question? Sorry,
there's a chance to carry on the discussion at the VIP lounge in the reception. I'll answer very quickly my question because I need to go and run off and prepare it. And I hope that many of you will join us to actually have a chance one-on-one with the panelists to discuss this further. The question on the Telespazio flood product, so that they do a return of the data every 12 hours for those that are purchasing the data. It's a sort of data product service. It's used by emergency responders already and others. I slightly confused it by saying that because when you look at when you're preparing for risk disclosure of assets and looking at risk pose, you can then look back at data that was collected near real time but has then formed a historic climate data set, so you can look back. But yes, it is used by emergency responders to actually understand the impacts of the flood or the likely impacts. It's used to refine modelling in near real time, as well as then inform and check accuracy of modelling capabilities. That's one of the areas in which climate data, sort of historic records, are used, is to inform and improve our projections and the ability to identify potential impacts. So.
Thank you for the question about standards and the ISO 14090. It's a very good question. You can have a standard, but if nobody's using it, what's the point in having it? So it is embryonic, the work. We're seeing a lot of interest internationally as well. We have sitting here from the National Trust, Keith, who is also working on it, National Trust, is an early adopter in the UK. We have another few national bodies in the transport sector and the energy sector who are also early adopters using it in the UK. We have some work outside in Canada, in airports in China. I don't want to visit them right now. And we also have lots of inquiries on training. So we've got online training courses and so on. So it's really just picking up, but it's picking up fast, and we're delighted with the interest that people are showing. The reason I was mentioning standards like ISO 14001 and 9001 early on is they're known standards that have scaled really rapidly. And so we're still at that sort of testing stage, but because it's a sort of chicken and egg situation, you need to prove the standard for people to use it, and people only use the standard that's being proven. But we've got finance sector looking quite closely at us with multilateral development banks and so on. And they want to see it that it is proven and the progress is good so far. So they're thinking that they could potentially use that as mechanisms to look at who they can invest within. And we have France, for instance, actually legislating so that they're making sure that ISO 14090 is delivered by specific organisations of specific sizes within the country. So it is, in terms of only been around for about 9 months, it's already taken off faster than most other standards would have. And we got 100% consensus in the international community that we had the standard as good as it could be for the launch of it last year. So all our hopes are still there, but yeah, we're still proving it. Yeah, thank you.
Really good question. So the one on whether adaptation can be made mandatory and why we don't advise on that. Unfortunately, we can't. So our role, we sit slightly outside government, so I'm not technically a government official. And the Climate Change Act was set up so that there was a mitigation target, which is legal, but there's only an adaptation process. So there's a process of national risk assessments, which is where most of the numbers that I was showing have come from, which we lead on. And then there has to be a national adaptation policy, but that policy can be anything. So one of our roles is to scrutinise what government is doing within that policy and to say whether we think it's adequate or not. And based on my very few slides, you can probably tell what the sort of tone that our progress reports take at the moment. But what I would say is this year is a fantastic opportunity to really drive home how good adaptation can look. And you guys will have some fantastic examples, I'm sure, of what works and what beautiful, well-functioning buildings can look like. Please do tell us, because we're always after kind of gold standard examples that we can take back to departments, actually show them that it is possible to do these things. Excuse me, because that can drive action a lot more than, say, driving requests for more regulation or more red tape, which we know isn't very effective at the moment.
Thank you. And this gentleman in the front wanted to ask a question.
I just want firstly to echo what the gentleman over here said. It's an astonishing, wonderful array of intellectual talent to bring into this arena. If you were all directors of a new company, you'd challenge Facebook, Amazon, Google, the whole lot. You would be world-class at a stroke. My question actually is for Edward, if I may. The key application of green finance in the UK is the critical demand. We haven't yet issued a single municipal green bond for the UK at all. The USA, China, Stockholm, Liechtenstein, everybody's doing it except us. I'm looking at the Oxford and Cambridge ARC as the key economic development zone of the UK, and how to engineer a municipal green bond that would provide the funding for its development, including retrofitting and all of the things that you've all been so brilliantly describing in a major model at financial scale. Because you can't do this without, the minimum for the finance market is 100 million. It's just pathetically small anyway. So it's got to be at scale, and you can replicate then across all the major regions of the UK. Is BAES able to orchestrate a municipal green bond for the Oxford and Cambridge ARC?
Good question. I know. I'm very happy to put you in touch with some teams that we have focused on local energy partnerships, who you may be in touch with anyway, but after the event. We do have people looking at financing for local energy partnerships more broadly. At bond level, we're really happy to look at that sort of thing as well. I think it comes down a lot to a value for money question, and whether or not the addition of the green wrapper to it is going to potentially get you cheaper financing. So that's how we've been looking at the context of green bonds up until today. Something that we keep under review a lot, so if you've got new evidence there, we're already always really interested to hear that. So yeah, maybe we should have a chat afterwards.
Any more questions? Yes. Yes, please. Sorry, the last question. Lady at the front, the last question.
Thank you very much to the panel. More fantastic representation of the carrot and stick and the tools that we need to make this happen. I guess the question to all of you put together is that where can we have or set up a platform that enables us openly and transparently share best practice and build on the expertise that is happening across the built environment sector as well as in the government. So where is that magical database that instead of reinventing the wheel all over the country, we can tap into and see exactly what's happening. So yes, TCFD is being completed to various degree of efficiency, and some of those numbers are true, some are still being worked out, but can we look at doing something collectively? And picking up on the speaker from a presentation earlier today, speak with one voice.
About 6 years ago, I set up a platform called Pinpoint as part of the work I did for UK Green Building Council that had 3 years of financing, and it had huge amounts of buy-in. As of at the moment, I don't think anyone uses it. If we are going to set up a platform, as you suggest, it needs a huge amount of buy-in and it needs continuity, which we haven't seen yet in the industry. If the UK Green Building Council can recommit to that, great, but it probably needs relooking at. And that project needed 50,000 every year for 3 years just to get it set up and running. So if you're talking about an online digital platform where best practice can be shared, the numbers are pretty huge and the time scale is also quite huge. So I'm sure I'm sure we could get that if we were all in agreement, but getting that agreement is a lot trickier than people believe. But I am optimistic.
Thank you so much. On this note, we would like to close our Q&A. Let's thank the panel in the usual way.